What's up, guys? It's Wednesday, April 19th. I wanted to talk to you real quick about some things. Didn't get to make a video this weekend. I've been feeling a little under the weather. And we had my kiddo's third birthday party, so I didn't get around to it. I just wanted to clarify some things. First of all, VIX, Volatility Index. Wanted to look at this. We've seen this trend line last from November of 17. It's held through the COVID dip. And now we are down below it pretty significantly. That's a pretty big deal because, breaking a 5-year trend line is no joke. So it's very possible that we come back to retest this trend line. And if that becomes resistance, we could see a pretty good bull market for 2023. Real quick, I haven't looked at this yet, but I just wanted to check out some statistics. Typical bull run after bear market. Let's see what we can find here. Average length of a bear market is 292 days, or about 10 months. Let's see. Let's say percent return after bear market. Let's see. According to Wells Fargo Investment Institute, the average 12-month return after the end of a bear market is 43.4% return. The average drawdown is 27% during the bear market, 20%. So they're saying under 20% is a bear market. And then coming out of the bear market is a pretty legitimate bull market. So that's just from a quick Google search. I'm sure I can find you better examples. But it would be pretty interesting if we come back to this trend line and find that it is now resistance, because nobody is really expecting a bull market at this point. Even me, I'm expecting a rip back in the other direction. So I want to talk about that as well. So I don't really know how to estimate an expected move on the VIX, but if we were to say that was the bottom 50% move, yeah, that doesn't really work. So let's skip that for now. But what I do know is breaking back above the trend line is pretty bullish, right? In a normal stock. So we got to be prepared for both. Because if you look at, I just posted a picture a minute ago. Let's use a cleaner chart here. Daily chart. If you look at the S&P 500, you see that we've had pretty wild moves here. Let's see if I've got a rectangle chart. So let's see. So about $100 move here. 100-point move right here, 472 to 41.75, so 100-point move. So usually we have, this was a really large one here, 4,100 down to 3,900, so 200-point consolidation area. This one here, 4,200, so about $150 move. And here, as of right now, we're at about $100 move, 100-point move, right? 40.70 to 41.70, right? So that would be enough, in my opinion. We have moved enough to say the consolidation is over. If you compare these, right, $100, $100, this was 200, 150, 100. I would say it's enough. If you look at it closer, it doesn't really look like it because the size, let me delete this so you can see, so you can compare the size of the candles, right? This candle here, these candles, the size of these candles are not really matched here, right? We had one large day here, one large day here. The reason that is probably because of the moving average. Yeah, we got a little extended there, but this one right here, we came into the middle of the moving average cloud, the Ripster cloud. This is a really good tool. If you don't have it, Ripster EMA Clouds, it's free for tradingview.com. One of the best tools I have found. But usually when we come around 50% in that middle green line here, we'll see the big runs, right? So we got down there and we saw big candles. These are fairly substantial candles, but nothing like this. So the question is, are we going to, so this is energy, right, being released both directions. If we're consolidating this tightly, that same amount of energy should be here, and it's probably going to be released one way or the other. So if we get a move down, so if you look at, I got two ideas. Neither of them are probably correct. We're right here around the middle of this. This is also the prior breakout area, which would be about 41.30. And we'll look at SPY and figure out what number that is here in just a second. I want to say it's probably like, I don't know, 411, something like that. 409.50. I don't remember, but we'll look. If we get a pull back to this tomorrow, especially if we open down here, I don't know if we're going to. We'll look at futures here in a second. But when we get down to this prior breakout area here, look for a very large move up. Right? An equal candle to one of these. One of these. It's about time. How many is this? 1, 2, 3, 4, 5, 6, 7 days. 1, 2, 3, 4, 5, 6 days. 6 or 7 days. You know, in between 5 and 7 days, you could see a pretty good move up. So be careful for that. If we find out that this is support, this would be a low risk place, because all you do is you would just make your stop loss would be the bottom of the green there, right? So you'd have a pretty tight stop, the bottom of the green versus the top of the green. So I mean, as far as points wise, it's 10 points, 41.20 by 41.30 on SPX. If you wanted to play calls at 41.30, stop loss 41.20, and just see what it does, right? If we get a move like that, it's very possible we get another move like this. So we would just break through all of this junk. Since we've been consolidating instead of spending that money, spending that energy, we're consolidating, so we're building that energy. So we would look for a move similar to this. So you'd say $150, $100 move. You know, that could put us up here quickly, right? You get a very large candle here, break out this high, gap up, continue, consolidate a little bit, gap up another day, and then that's your ending move, which would tag this top here, right? That's a theory that I have. It's a valid theory. I don't think I'm wrong on that. But if you look at these huge candles here, huge candles, huge candle, and right now we're just consolidating sideways. Holding the moving average, we're bullish. They're just chopping it up, and it's because they don't want it to fall. They have a place they want to go, and it's likely going to be somewhere up in here. It might not be a new high, but it would be somewhere up in here. 4,300 SPX. So that's theory one. Theory two, the same amount of energy right here this same amount of energy, this 150 point move that hasn't happened yet, is going to be released in the opposite direction, right? If that was the case, so 4120, 30, 40, 20, 39, 75, 39, 50 area. Let's see if there's any support down here. You'd say this area is support. See how it's bounced right here? It's bounced right here. Bounced but got under but bounced. Came back to retest it and bounced. So 39.40 area, that's going to be a target. A target. And that same amount of energy that could go higher if we come up here and get knocked out, or if we break that 4120 SPX area and break this trend line, right, this trend line here, break that trend line, we're going to be at 39.40 very quickly. So right now I'm bullish. However, there are some reasons why I'm not. So right now we're bullish, right? RSI's going up. I don't know what the MACD does. Let's see if we can find that real quick. So right now it's still bullish. It's losing momentum, but it's still bullish at the moment. It could come back and bounce, kind of like it did here, and get a blow off top. See how it came down, retested these moving averages and bounced. Came down, retested support. Oh look, 39.40. That's a pretty important area, right? And bounced. So that's going to be a target. We're going to put that number on the board. SPX 39.40, which would be, oh my goodness, look at all these lines. Which would be this big white line. 393, 393.15 is a real target. If we break this, not that one, this one. If we break this one, 393.15 is going to come very fast. And they'll probably defend 397, but they'll tag 393. Because remember, this is support area. Support area. It might even be lower than that. It might be down here in the just even 390. I think 393 though is pretty safe to say. 393 and 39.40, they're pretty close. SPX, SPY, right? So we'll go with that for right now. What I would look for is breaking, and they could do it on some fake news, right? This is the prior, so let's look at this closer. So get my pin out. This is the prior breakout area, right? They came back and retested it. The expectation is to bounce and continue higher. If they do that, then they're going to go for this 429 area, which I said they can do within a matter of 3 days. 430 would be a pretty legit move from 415, 414 area. That same move down, is possible. It's going to happen within 2 or 3 days, I would assume. Let's see if there's any reason for it to happen real quick. Market calendar. What's today? So interestingly, on the Fed news, we didn't get that big of a move, which is telling because that means there's just more energy built up that hasn't been released yet, right? So normally on a Fed day, we would have seen a candle like this, or even like this was a Fed day. Normally on days like that, on Fed news, we would see a day like that. Today we saw a pretty small candle comparatively, and we actually closed below yesterday's low, but left a green topping tail, so we would probably come down, spike 413.80 tomorrow, and pop higher. But again, breaking this area here, breaking this 412 area opens the door for a move to 393 quickly. We've got jobless claims that could maybe move, Fed stuff, PMI might or might not move it. Not a whole lot going on here, so we'll see. We'll see if any of this stuff on Thursday moves the market and breaks 412. We'll be looking for that. If we break 415, I would look for that move to 421 and possibly 430 quickly in a matter of days. Because if they break this consolidation area, they're going to leave people behind. They're not going to come and retest stuff and bounce. They're just going to go. So we need to be prepared, and we don't want to be on the wrong side of it and miss it. So if we get higher and then we break this trend line, we need to realize the bull isn't the direction, the bear is the direction, right? We come down, break the trend line, and bounce somewhere around 411 and start going higher. That's going to be enough momentum to get us up to 430. So we want to use this trend line and just say, okay, are we above it or below it? And that's going to kind of depict, if we get below it and then back above it, you don't want to be in puts. You're going to be wrong, right? If we get above it and then break it, you don't want to be in calls, right? I was a little concerned today because I was overly bullish. And if you look at stuff like Tesla, this might be telling that we broke away from areas. So overall, this is bullish. Overall, you've got a bull run that took out the prior pivot. It's consolidating in an area of support that's been support. Go all the way back over here. This area has been support, right? So we should see a move from 180 to 260 to 250, right? We should see a move from around here up to fill this gap because there's no liquidity right here, right? The problem is there's also no liquidity down here. So as you see, we fall straight through it. We don't even retest stuff. We just fall through it, come back right through it. So after earnings, we're down here. Breaking 164 can open the door, trap door, and fall, which would also pull SPY down to that 393. But for the moment, it is technically bullish. If you look at the moving averages here, we're bouncing off of it like institutional buying. So the expectation is they're going to buy up that, especially if you open above 164, they're going to buy it and rip it the other direction to 250. So keep an eye on Tesla the next few days. If they did some kind of fake out, put in a triple bottom, double triple bottom, whatever you want to call that, we can be up there really fast. At the same time, you break this, it can just dump, right? Where was I going with that? I totally lost my track of my train of thought. Whatever. So here's what was kind of a red flag to me, though, was if you see, these are pretty interesting if you look at the way the market gaps. So we're going down here and it gapped and changed directions, right? Up here it gapped over the 50 and pretty much continued. It gapped and kind of started creating this sideways. It gapped and created a bear trend. It gapped, started a bull trend again. And then today we gapped down. So in my opinion, if we were in a bullish trend like that, we wouldn't have broken down from this area. So that could be an early warning sign right there that, you know, we're done. It's falling apart. Everything's falling apart, and nothing's going to happen. Another reason, same thing with Nvidia today. No, wasn't Nvidia. Nvidia kind of did a similar thing. It was in an up. It was reverses on these gaps, reversed. It gapped up, so we could argue that it's going to reverse as long as it stays under that 281.50. Gets above 281.50, then Nvidia's bullish again. Right? See how quick this thing squeezed? That day we were in it. That day, you guys remember that? We did 305 calls like down here. So it's very possible that we've got this area of consolidation. We open above 282 and we rip to 320. So keep Nvidia. That's why I'm still kind of bullish on all this stuff. So more stuff for the bears. We talked about the VIX breaking this trend line. Getting back above that trend line though is going to be enough to crash the market. Just getting back above that trend line. Everybody knows that trend line's been there for 5 years. They're expecting it to come down. You have an outside day today, which is interesting. We're going to look at some other ones here. But we have an outside day, which is kind of a sign of a reversal, right? If you get down on smaller time frames, you have some bullish RSI stuff. So let's look at this here. You've got higher lows on the RSI, but you've got lower lows on the VIX. This divergence, right? And it doesn't always pan out. We were calling that same thing up here, and it ended up being nothing, right? But in other places, it was a sign. Let's look at HYG. Bonds typically move before the market does. So corporate bonds, these are actually in a bearish crossover, right? They're holding the 50 for now, but opening below it could open the trapdoor, and we could see a pretty good fall. We've had this line on here. 75 area has been resistance a lot. 1, 2, 3, 4, going back even to here. 75 has been resistance. So, keep an eye on that, because today that area was resistance. So it's very possible we open below this 50 and that falls. If HYG falls, SPY is going to fall. There's no question. If you look at, but right now, like I said, we're in a bullish trend. We're above the 50. They're just going to keep chopping up, right? We're above the 50. Expect a bounce, and they can keep going higher. You got this like ghost candle kind of thing, you can say, up at 76. So you could reasonably expect to move to 76. IWM was similar. There's a IWM. There is a, look at this candle out of nowhere. I put a note on it so I wouldn't forget it. March 17th. There's this candle, and the market didn't go there. Like, it just shot up and shot back down, right? So it's not a real candle. Somebody just got filled up there. But it's interesting that 195 area was also a level that we've had on our charts for years, right? I keep saying this, buy the freaking dip, because every time it gets below this area, eventually, that's a good place to buy, right? It gets below it, pops up. Gets down below it here in this area, pops up. Gets below this area, pops up. Gets bought up. So we're back here again. And this looks like it's coiling for a major move higher, right? Break above that, and we're gone. So buy the freaking dip over 180. look for a move to 195. So that's I don't know which way we're going yet. Just wanted to give you some ideas. VIX is kind of throwing out some weird things, but overall everything's still bullish. The big thing to be aware of is just expect, I do that every time, expect a large move coming with this kind of consolidation, breaking below the 50. This is 4-hour chart. Breaking below the 50, especially if we get some kind of like jerk reaction move, like break down on jobs and then pop right back up. That's a good place to short. 4160. Let's see if that's an area. Here is Bookmap. Time to buy a new computer. Let's see where the guys are today. So 4165 to 4160. There are large areas of orders there, right? 4190 as well. And probably 4200. Yeah, our 4200 guys there. 4190's there, 4180, but 4160 to 4165. So they're likely going to navigate to that area. We're at 4170 right now. So it's possible if we somehow break below it, that would be a pretty good entry. So we break below it on some jobs news, come back up to 4160 to 4165 area, and let's get puts down to 393. Just an idea. If they come down to 460 on jobs and that holds, let's say that if 4160 holds, if we come down here, that's also the 50. That's going to be an area to buy if that area holds. So let's play 4160 tomorrow and expect a large move coming over the next few days, depending on what we do tomorrow morning. So I'll leave you guys to it. Last thing we talked about this morning was we kind of had this wedge, and we got below it and we came back, and I thought we were going to break out, but we didn't. We actually got rejected there. So that could be a bearish sign as well, that what was support is now resistance. Even though that 50 is still underneath there, they can gap below it on bad jobs. And then when they come back to 4160, we want to short that. So 4160, keep that in mind, to 393. Over 4200, it doesn't look like there's hardly anything up there. So, they get 4200, they can move to, there's not a whole lot above there. 4160 is the big number. Break below it, there's nothing below it to save you. Above it, there's still some sellers up here, but they're going to run a test of 4200. Thanks. Bye.